So this is 19th of April 2026 and we'll start with section 1, which is Nifty. Right. So in this section we'll discuss about the major indices, which is the Nifty and S Nifty, and then we'll discuss about mid cap, and then we'll discuss about small cap. So right now we are looking at Nifty, and let me check the candles first. So this is 17th, 16th, 15th, 13th. Okay. So 14th might be a holiday, right? So that is it. Yeah, it was a holiday. So we had a holiday on Tuesday, and that is why we have 4 days week, right? So what has happened? So basically, we have had a fall through day, which we discussed last week, and we also discussed that since this is a very nice gap up, so the gap is kind of huge. So it was around 23,154. So if Nifty might have come down to 23,154, then this gap might have filled, right? So, but that is not happening because the market is in a very rushed situation, or I would say it's big time uh, short covering and FOMO buying and reversal recovery is happening. Okay, that is why things are beyond normal as it seems right now. And we'll discuss that thing in our section 2, where we'll discuss about what all things are happening underneath the market, right? So there are a lot of things that are happening underneath the market. So before that, let's talk about the index. So if we look into this one, so on Thursday, it exactly reversed after kissing 50 DMA. So that's the sign that we are getting right now. The thing is, the market has recovered very nicely from the bottom. It has recovered above 21 EMA as well as 10 DMA, and right now it is hanging around 50 DMA. Okay, and this is kind of 1, 2, 3, 4, 5, 6, 7, 8, 9. So this is 10 days recovery from the day one. Okay, and we'll repeat this every time while we talk, right? So this day one low of 22,182 is to be maintained. Okay, that is point number one. Point number two, we have had a day four follow through day where we had a good close after gap up, and then thereafter the market tried to break downwards, but again it reversed after taking a good uh, support at 21 EMA. So 21 EMA gave a nice support, and the market recovered from there. And another gap up happened on Wednesday, right? So this is a nice gap up that happened with 1.6% kind of move. That's a very good sign. And thereafter, we have kind of 2 days, 1 day reversal and a second day reversal recovery, right? So these 2 days happened, and it is exactly close to 50 DMA. Now, what to see next, right? So we have a good 50 DMA there. That is 24,414. Okay, so that might give a strong resistance to the index right now. That is the point of view. And below that, we have a nice 31 EMA support. So it is kind of a squeeze scenario where there is a possibility of one gap being filled, right? So if you look at this gap, there is a high potential opportunity that this gap might get filled in next 3 days, and the Nifty might take support at 23,733. So there is a scenario for the Nifty to squeeze between these two levels, like this 50 DMA and 21 EMA. So this is the squeezing zone. So that is scenario one. Scenario two, since this is a sharp reversal V-shaped recovery from the bottom, and it led to filling up of gap, right? So we can see this gap is filled, and all the gaps below are filled in one go. Now we have only one gap remaining, which is close to 200 DMA, right? So if Nifty rallies up to 25,158, then this gap which is there might be filled, right? So there is only one gap remaining straight away. Now, again, scenario number two would be if things go really bad and again volatility increases, then we might see a touchdown towards 23,153, right? I believe the market has actually bottomed, right? That was evidently clear due to fall through day that we discussed last week, and thereafter we need to strategize how to pick up things going forward, right? So in order for us to understand how to take up things going forward, we need to understand what happens post the follow through day, right? Now, beyond the follow through day, there happens to be 2 to 4 weeks kind of window where a lot of stocks might break out and true market leaders based on themes might emerge, based on earnings they might emerge, or based on perception buying they might emerge, right? We need to have a lookout for those names, right? But what also happens is if it happens to be a V-shaped recovery, right? So there is a lot high probability that the index might come down in order to fill the gap as well as to do some consolidation, right? I think that there is an opportunity for the market to consolidate on the right hand side so that it gives ample opportunity for market participants to analyze and get into stocks which might be prepared for the next rally, right? So for that, I believe that the market might go into a consolidation on the right hand side after taking a resistance at 50 DMA. If trend weakens, right? So we'll discuss in section two if trend is strong, weak, or what. So for now, it would be very healthy for the market to take a resistance at 50 DMA and then come down to 21 EMA, or if it would be far more better if it comes down further and fills this gap at least. Okay, if this gap is filled, it would be very nice scenario. Okay, so this is section one where we discussed about Nifty and things are very ferocious as of now and it has been a great bottom. I'll discuss further about how this bottom looks like with respect to one indicator that we spoke about last week, and we can further discuss about what happens after that indicator turns positive, right? So that we would discuss in section two, but for now we'll move to mid cap. If you look into this mid cap, right, mid cap ETF, so it is not as ferocious as Nifty looks like, right? This mid cap, right? So mid cap is not as ferocious as the large cap Nifty looks like to be. Okay, it is kind of okayish, and it has already recovered above 200 EMS. So we can say that mid cap is far more stronger than the Nifty, and that is why there might be some good moves that might come in mid caps at first, right? So Nifty has been weak for quite a long time and mid caps are strong. So we can see a nice consolidation in the mid cap also on the right hand side. And that gives us another good opportunity in times going forward. Next is small cap index. We'll just move towards small cap. Okay. So the greatest move that is happening right now is in the small cap space. So we discussed for last 2 to 3 weeks that it has been a great double bottom, right? So in the left hand side, you can see that 37.45 was a nice left hand side W, and on the right hand side 37.34, exactly 11 paise below this left hand low, right? And beyond that, after it has had a good double bottom, the market has recovered nicely, or the small cap segment has recovered nicely from the bottom, right? So you can see that this is the third week right now where the small cap has recovered very nicely, and it's almost kind of 18% recovery from the bottom, as we can see. And another good characteristic that we can see right now is it is coming out of a downward sloping channel, right? So let me draw this line. Done. So basically, if you could look at this line, right? So I've drawn this thing as a double parallel line, which confirms a downward sloping channel. And after taking the support exactly at double bottom, the small cap index has recovered nicely, and it is coming out of a nice downward sloping channel, right? Now it is a very long W formation. W means long-term double bottom formation in the small cap index, right? So that is a very good formation. So out of all the three indices, the best one currently that is looking is small cap index, which is forming a double bottom or a W formation. Along with that, we have a nice downward sloping channel on the second leg of the W on the right hand side, a nice breakout happening beyond that, right? Now that opens the opportunity for it to just hit 200 EMA, which it has already done. So we can see that it is a nice rally in one go at 45 degree that is happening in small cap segment. That is leading to a nice catching up to the 200 DMA in one go. Okay, so 50 DMA is already caught up. 200 DMA has been caught. Sorry, 21 EMA has been caught up, and then 10 DMA is rising up. So basically, after some time, you might see all the moving averages trying to slope upwards on the right hand side. The 200 DMA is trying to slope downwards, which it might get flattened out on the right hand side. So all in all, it seems like it has been a good, very good reversal recovery from the bottom in the small cap segment. Again, same thing. In case of large cap, we have seen that it is hitting 50 DMA and it is above 21 EMA. And the market, if it comes down, might take first support at 21 EMA. That is point number one there. Point number two here is it has convincingly crossed 50 DMA as well as 21 EMA, right? So, and both are very close. I mean, if you look at the chart, right, those are kind of intersecting. And next week, we can see an intersection happening in 50 DMA and 21 EMA, right? And that might act as a support, right? So, and since we have a 200 DMA nearby, that might act as a resistance. So again, we have another scenario in case of small cap segment where we have 200 DMA on the upside and 50 DMA on the downside, as well as 21 EMA on the downside. So this range of say 8% kind of range might be the scenario where the small cap segment or the small cap index might take support since it's a fast and ferocious upward rally if 200 DMA acts as a resistance, right? That is the scenario we have to look out for. Now, I'll conclude this section with a simple thing that we have seen a nice follow through day in the main segment, that is Nifty as well as Sensex. And we have seen a nice move in small cap from the bottom as well as the mid cap from the bottom. This is a very early start of the journey, right? So if someone says, ki, okay, let's catch the bottom, that could be true based on ETFs or any bottom buying that you can do on a particular day, right? That could be done. But the scenario is like diversifying monies or allocating monies in stock for a long-term scenario is a long-term game, right? That opportunity never goes away, right? It depends whether the stock recovers from the bottom or goes sideways or corrects from the top, right? It depends from at any point in the market. So the thing is, we have a good double bottom in the market. That is point number one. We have a good indication of the bottom has happened in the market, and we have to have an positive bias in the market with the view that after a short consolidation, if it happens, for example, if a short consolidation happens, and if this lockout rally, the rally that we are seeing right now is called a lockout rally, wherein those guys who are waiting with cash, right, might not get an opportunity per se to deploy cash instantly in the market. That is called a lockout rally. And the lockout rally fizzles down at some point of time in the market. It happened across all the markets and across all the years till we have the data right now. Okay. The thing is the patience to sit on the hand and wait for the right opportunity to come in and then look for the right base to enter, right? So point number one was bottom is in place. Point number two, we have a lot of evidence that the bottom is in place, and we can obviously look into the data underneath the market. Point number three is it's an confirmed uptrend, right? So the status as of now is this is a confirmed uptrend wherein one should look for an opportunity to deploy cash in coming weeks in good names and write those names for say medium to long term. That is the scenario. Now, if sideways constellation is going to happen or not, we don't know. Okay. If the lockout rally would continue or not, we don't know. These all things depend upon the FOMO that is there in the market, the FIAs, if they continue to buy or not, the retailers, if they continue to pump in monies or not, in turn, the DIIs, the geopolitical scenarios, if it turns volatile or not, or if it is okay or it remains the same as of what is happening right now. Okay. So a lot of things are going to happen in coming weeks. So we have to be very cognizant of the fact that we have to deploy our monies judiciously and make sure that we don't get into the predicting scenario or prediction thing, right? We won't predict anything. We'll just decipher the data and act accordingly. Okay. I'll conclude this section one here.